Hi, everyone. Welcome to our webinar on impact measurement. I see we've got around 40 participants so far. I'm just going to wait for a few more people to join, and then we'll get started. Okay, we've got around 50 people and it's 7:02, so I think we can just get started. All right. So hi, everyone, again, and welcome to our webinar on impact measurement. Thank you very much for joining today. Before I get started and introduce the theme of the webinar, I just want to draw your attention to the Q&A button at the bottom of your screens. As we go along today, please feel free to use the Q&A function at any time to share questions with us, and we'll try to answer as many as we can in the panel discussion. So the topic of today's webinar is measuring impact. Are we there yet? When we think about measuring and reporting impact, I imagine that what a lot of people, myself included, envision is a glossy report with a handful of numbers in large print, a kind of snapshot that tells us, in short, whether an organization is doing good and how much good it's doing. In impact measurement, it often feels like we're trying to boil down our data into the headline that tells us, one way or another, what change has occurred and what role we played in it. Of course, this happens because we want to hold ourselves accountable for demonstrating concrete and quantifiable impact. But at the same time, we need to acknowledge that change in real people's lives happens in complex and very often non-linear ways. So we will never truly understand impact if we only pursue the high-level numbers without seeking a deeper understanding of how and why change happens. So how do we do both? Gojo released our third annual impact report recently, and in every successive report, we have tried to get closer to what feels like a comprehensive and honest presentation of our impact. Today, we'll be sharing the highlights from the report, as well as our findings from our financial diary projects in Cambodia and Sri Lanka. We're also joined by our board member, Stuart Rutherford, who will share findings from his financial diary project in Bangladesh and his lifetime of experience studying the money management practices of the poor. So this is the flow of today's session. We'll start with a presentation on the impact report, followed by presentations from Yoshi and Stuart on financial diaries. And then we'll end with a panel discussion with Q&A from everybody attending. So just to introduce the people who are speaking today, I'm Shireel, and I'll be moderating today's discussion. I lead impact measurement and social performance management at Gojo, and I'm responsible for setting up and managing our two financial diary projects in Cambodia and Sri Lanka. Harina will be sharing highlights from our impact report today. She works across a broad slate of projects at Gojo, including corporate governance and social performance management. She led Gojo in developing our materiality map and in thinking about our social responsibilities to stakeholders beyond just our clients. And in the past year, while I've been on maternity leave, Harina was responsible for putting together our most recent impact report and managing our financial diary projects. Yoshi will be sharing insights from our financial diary data today. Over the past 2 years, Yoshi has been deeply engaged in analysis of Krishi Para financial diary data to better understand the lives and money management practices of low-income people. He developed a new impact measure based on cash flow volatility as reported through financial diary data, which we call the fit factor and which we have written about in a paper on Gojo's website. He's been leading the analysis of the data from Cambodia and Sri Lanka. Now onto somebody who I think needs no introduction to most people here. Stuart is a pioneer of financial diaries research as a method of collecting high-frequency, in-depth information about the behaviors and fortunes of clients of financial services. In 1996, Stuart founded SafeSave, an MFI in Bangladesh that pioneers ultra-flexible savings and loan services for the urban poor. He's written extensively in international reports and journals about the microfinance industry and the money management habits of the poor. His books include The Poor and Their Money and the co-authored Portfolios of the Poor. He's been running the Hirshipara Daily Diaries project in Bangladesh since 2015. Now I'd like to hand over to Haruna to share with us some key insights from Gojo's impact report. Haruna, please.
Okay, thank you, Cheryl. Okay, hi everyone again. My name is Haruna from Gojo Corporate Planning Team. Let me start by sharing what Gojo is in case there's people who's new to the company. So Gojo and Company was founded in 2014 to create the private sector World Bank. Our mission is to extend financial inclusion across the globe, and the vision is to create a world where everyone can determine their future. Our long-term goal is to provide high-quality, affordable financial services to 100 million clients in 50 countries by 2030. So Cheryl, to the next slide. Thank you. Yeah, this is the overview of our business model. So Gojo, on the left-hand side of the slide, raises funds from investors mainly in Japan and uses those funds to make equity investments into microfinance institutions in developing countries, which on this slide is in the middle. These group companies provide small amount business loans, typically about $500 to $600 in terms of ticket size, to clients who are usually women in rural areas. So these clients use the loan to start new businesses to generate more income for the household, such as buying cows and selling the milk from the cow in the market, or maybe buy a sewing machine, make some clothes and sell the clothes in the market. The group companies earn interest fees when the loans get paid back, and Gojo supports the group companies by providing the necessary capital, and on top of that, by also providing management support and technology support to further enhance the growth of the business. Okay, so these are the key highlights of the Impact Report 2022 July. Let me start by saying that we have expanded the scope of impact this year from just client impact to larger group of stakeholders like employees and the environment. And with that, we also defined the first materiality map, which I will explain in more detail later. If we move on to client impact, the biggest highlight is that we have extended financial inclusion to 1.2 million clients, which is roughly equivalent to about 6 million people, including household members. On top of that, we have also started our first impact assessment survey with 2 of our group companies. Okay, so let me deep dive into each of those topics. First of all, stakeholder impact. So again, the concept of impact at Gojo changed quite drastically this year. Till last year, we only thought about client impact when we discuss impact. However, with the increasing trend of ESG investment and stakeholder capitalism, I'm sure you're all aware of, we also started to think, hey, maybe Gojo is also responsible towards stakeholders other than clients. So we defined our key stakeholders to be our people, basically our employees, environment, community that we operate in, and also the investors. By creating positive impact on each of these stakeholders, we believe that client impact will be maximized. And this thinking is also in line with the Universal Standards of Social and Environmental Performance, or USSEPM, designed by Cerise. I'm sure some of the people from Cerise have joined today. And this is also widely adopted across the microfinance industry. So I think you're kind of familiar with this way of thinking. Okay, if you can go to the next slide, Sheriel. Oh, hi, Celia. Thank you for joining. Okay, let me talk about the materiality map. So although stakeholder management and impact is important, we are a startup and we have limited resources, and we need to always be mindful of priorities. So Gojo developed its first materiality map through interviews with key stakeholders. And we all agreed that Gojo will focus on 1, client protection, and 2, employee well-being, on the foundation of 3, excellent corporate governance and business ethics. It was a good exercise to kind of understand the different interests of our stakeholders and also to create alignment within the company management and the board members. So if you want to know about how we developed this, what's the background, everything, it's all in the impact report. So yeah, please go to our website to find the impact report. Actually, I can share you the link later in the chat. Okay, if you can move on. Thank you, Sheriel. Yeah, let me move on now to client impact. Let us first share by talking about some output KPIs focusing on the outreach. So by March 2022, we reached over 1.2 million clients, which was a year-over-year growth of 70%. Majority of our clients are in India, followed by Tajikistan, and then Myanmar, Cambodia, and Sri Lanka. And if you look at the clients in a bit more detail, this is like a further breakdown of the client outreach, telling us more about who our clients really are. So as you can see, 95% are female and 82% live in rural areas. 20% of them accessed finance for the first time, meaning they have never borrowed from a formal financial institution before. We feel that these are all good achievements, but we also openly disclose that only 6.7% of our clients feel that they are resilient to emergency. This indicates that there's a lot more that we can potentially do to support our clients to cope with economic shocks. Okay, let's take a deeper look at the client satisfaction surveys. So this year we shared the results from 3 of our group companies. And at a glance, it seems that these are all great results. Like most of our clients are happy with our services. Like, for example, Sejaya, our Sri Lanka company, says 97% are satisfied. At the same time, there's obviously improvement points, which were shared by the clients, which is also a great thing because we now know how to better serve our clients. However, I'm putting a big but at the end of this headline. Our team questions basically, is it okay for us to really kind of fully trust this data? So what's how accurate or how unbiased is the data? Could it actually be the case that the results might be biased, given that the surveys are done by money lenders? So yeah, although this survey is really seems good and also quite insightful, this data quality is something we always need to be mindful of when we look into survey data, and we can discuss more about it in our panel discussion. Okay, yeah, so this is the interesting part. This is the summary of Satya's impact survey. Satya is our India group company. Yeah, so this year, the survey was conducted to over 1,000 clients at Satya through an external research company. And unlike satisfaction surveys, where you ask directly about how was the service, what did you like about our service, what you didn't like, this survey asks about many different aspects of clients' lives, such as income, funds mobilization, water, sanitation. So these are more like outcome KPIs and more directly impact measurement. It's interesting to know that households are starting to recover from COVID shocks, like you can see at the top of the graph. And also about 80% have access to water, sanitation, and also good healthcare. At the bottom of the graph, you can see education, which seems to be, I think, the top priority for many of the households. But as shared earlier, mobilization of funds in case of emergency still seems to be a challenge for many of the households. And this is where microfinance institutions can potentially play an important role. So yeah, this kind of survey we feel is very interesting to uncover the status of life of our clients, and we plan to do this continuously so that we can observe the change over time. Okay, and this is my final slide. Actually, this is something we looked really deep into, but in the end decided not to share in our impact report. So this is the client segmentation by income level. We decided to drop it because we weren't too sure about the data accuracy. But today I will share it to you secretly. At first, it seemed like 85% of our clients are living on an income of $5.5 per day per capita. So look at the left-hand side graph. But getting the accurate data was quite difficult. So yeah, for one company, we looked into the loan assessment data, and the left-hand side graph is based off of that. And then we kind of checked into another data point, which was the survey data, and kind of reconciled the data point to check how accurate the data was. And it turned out that the results were quite different. So when we use the survey data, which is the right-hand side graph, the percentage of those below $5.5 per day will drop from 85% to 60%. So this is a quite significant gap. And in the end, we ended up saying, hey, that's not included in our impact report. And one major reason for this is that the term average income or monthly income doesn't kind of mean much to people whose income is super volatile and can change on daily, weekly, monthly, or seasonal basis. So yeah, reported income is always just an estimate. There's no formal like backup or evidence to it. And if we ask the same person the estimated income at two different points in time, they will likely give us two different estimates. So yeah, this led us to think that neither, loan officer collected MIS data, nor surveys might be enough. So we need to have maybe a more realistic, accurate view of our clients to understand impact better. So with that said, let me introduce Yoshi, who will explain how financial diaries will help us understand more about clients. So over to you, Yoshi.
Yep, thank you. Let me share my screen so that I can move my pointer. Do you see my screen? Okay. Yes, thank you, Hana. Yeah, I agree with you that income is not simple, but not just income. Expenses are not simple. Also, financial transactions are not simple. I think simply because maybe life is not simple. And the fact that life is not simple makes the impact measurement complicated. That's the reason why Gojo started 2 financial diaries projects last year. We wanted to understand how we don't know poor people's financial lives, which is not simple. And we wanted to at least try to measure impact of financial services. And today I want to talk about some real life examples from Cambodia financial diaries, which is one of the projects we started last year. This is sponsored by JICA. Thank you, JICA. And one of the purposes of this project is to explore how MFI loans fit into Cambodian people's lives. So we collect high frequency panel data on income and expenses and financial transactions of low income households in Cambodia by phone call or sometimes visit to ask details. And in this summary, the period is the 22 weeks from last October to March this year. And the number of records is more than 85,000 in 137 categories from 132 households. And diaries are located in 5 provinces in Cambodia. Okay. And okay, let's go to example. The graph shows inflows in the upper part and the outflows in the bottom part, and on the timeline to the right. It's going to the right this way? I don't know. The biggest bar in the upper part is 1.25 thousand US dollar MFI loan taken on December 1st last year. And on the next day, this person spent the money to buy woods. We think these woods are for their house improvement. Maybe constructing their houses. And if you look at the navy bars in the outflow, a bit on the right side, you can find a series of spending on housing. Sometimes it's material, like woods or metals. Sometimes it's a wage for carpenters or masons. And needless to say, to manage this whole house improvement project, this person needs to keep raising funds at the same time. So this project started with I don't know, maybe this person waited, but started with MFI loan, followed by a remittance from a son, or they also sold a car several times, plus a gift from relatives. And we can see how their income is made up of the inflows of many different sizes of different sources. It will not be simple. For example, as Haruna pointed out, to classify this person's income under a particular property line, I mean, it's not very simple. Also, I think for today's theme, the marginal impact of the MFI loan is not simple here. Definitely, I believe this loan helped the house improvement project, at least partly. But it's not clear to what extent the loan provided some value that will not be replaceable with, for example, loans from relatives or remittance from a son. It's not clear. And before going to the next slide, we hope that by seeing these kind of examples in financial diaries, we can consider how to offer loans that better fit with how and when people want to spend money and other sources of funds in their lives. At least we want to try to. But yeah, I want to go to the next one. The next example is very different from the previous one, however. You can see. In this example, we cannot find a very clear, how can I say, impactful outflow like housing or typical income generating investments or perhaps weddings or ceremonies or something like that. Instead, you can find some loan repayments. Yes, so we may call this kind of transaction kind of refinancing. And yeah, I have, or maybe some of you also already have a mixed feeling about this. Yes, refinancing must help you manage cash flows, but sometimes it's a sign of over-indebtedness. And I don't know exactly about this case, but we also don't know that what the previous loan was spent for. So the impact of this loan needs to be unknown. And we also can look at it from slightly different angle maybe. So if you look at the inflow side, did this person need this loan? Because their salary looks like stable now. I don't know, but perhaps they just went to the next cycle of the MFI program. Okay, you have done this loan, and how about you go to the next cycle of the loan, so that they can keep a so this household can keep a good relationship with the MFI. They did this. We don't know, but we will have an interview session with the household this year. But anyway, this example already is giving me a lot of chance to just transfer forward. And one final comment is that when Haruna used of this graph, she pointed out that the salary looks like growing. So if we were to judge the impact of this MFI loan by using a simple impact measure like income growth, the MFI loan could be regarded as an impactful loan, even though there's no clear link between the loan and income generation or income growth, salary growth. Yes. And I think I need to be a little bit quick. So this is the last example from Cambodia. So this is also very different from the previous two examples. We know a bit more background of this much more simple example because Maxima Microfinance is our group company. Maxima developed a new loan product 2 years back with advice from Stuart, which is in short a small and quick loan. So in this example, so this person took $200 from Maxima and spent $400 to go to see the doctor on the same day for COVID medical treatment. Yeah, I like this example, but by typical impact measures, maybe their income is not growing, right? And savings are maybe not growing. The loan was not used for income generating activities or investment or facilities, but I think this loan was impactful for this household. We still don't have honestly speaking, we still don't have a magic good formula to use these financial diaries program data directly to develop financial services. We are struggling in the dark, but sometimes we can see hope like this, where we understand what a useful loan looks like in someone's life. We want to know more about the appropriate financial lives through financial diaries. That's the purpose of our financial diaries program. And yes, Sri Lanka diaries. So when we started this Sri Lanka financial diaries last year, we didn't expect the economic crisis which is hitting the country right now. The impact measurement is sometimes simply powerless because of external factors like macro situation. So even peer comparison among MFIs is impossible here because MFIs are stopping loan disbursement in Sri Lanka. But anyway, let me introduce the diary. The similar data collection as Cambodia one, but for this one with a self-recorded note we're using. So people are writing by themselves to the notebook, and we are taking photos. And in this summary, the period is 29 weeks from last November to May this year. And the number of records is more than 55,000 in 30 categories from 100 households. And diaries are located in 10 places in Sri Lanka. And as you know, massive inflation is hitting the country right now. And the poor people's life are on edge. So in parallel with this daily data collection, we started, we call this a monthly tracking survey to track the severe living situation in the country. And let me share commentary from the latest survey. How can I say? It's very, very tough to read. We started publishing monthly summary report from the Sri Lanka financial diaries plus tracking survey. And the URL is here. And it's great if you Google it and find the very short summary slides of the situation. That's great. And here is one of the survey results about food. And as you can see, the situation is extremely tough. This is the July result. Almost all needs to cut down on purchasing food. So the third one. And most reduce the number of cooking. And less foods are in a store. And some needed to skip meals. This is the result. And also, we see the same situation reflected in the daily diary data part. The proportion of the food spending keeps going up. But this doesn't mean, of course, they are better meals. The inflation is sky high. It's almost doubled from last year. And actually, the amount they can eat is decreasing dramatically. They are forced to spend more on food and they are forced to eat less. The financial diaries gave us the opportunity to get timely data about the real situation on the ground. This led us to set up a food security fund for vulnerable people, especially pregnant women in Sri Lanka. In total, we raised over 100,000 US dollars to purchase food purchase. This is our the separated program than financial diaries, but this is also the Gojo program. And to the end, sometimes this kind of macro situation can trick us. Sometimes everything looks good, right? MFI work everywhere because of the good macroeconomy situation. Sometimes everything doesn't work because of kind of a not so good macro situation. In that case, we need to simply wait. And there's a challenge for impact measurement here, I think. Is it possible to control or remove the effect of macroeconomic situation? That's a big question, big topic for us. Maybe we can try. It just started, so maybe it's great if you can ask for help from you, all of you today. Let's keep in touch. Thank you very much. That's my part today. Cheryl, I need to give back to you my screen share.
Thank you, Yoshi. I will share my screen again. Can everyone see it okay? Great. Okay, so we can see from the examples that Yoshi shared that there could be many situations in which typical impact measures focusing on income growth, for example, in which these typical impact measures aren't the most appropriate measure of the actual impact of a loan in someone's life. Financial diaries help us to look at how people use financial services in the context of their whole lives, including their other debts, their goals, family relationships, emergency needs, and so on. This gives us a whole different lens for understanding the actual utility of a financial service to our clients. Yoshi also touched on a question that we have been considering for some time now, which is how can we use financial diaries to develop better financial services? On that note, I'd like to hand the time over to Stuart to share some observations from the Hershey-Parr diaries. But just before I do that, sorry, Stuart, I'd like, coming up very shortly after Stuart's section is our panel discussion. So if you have any questions, please send them in so that we can discuss them. Thank you. Over to you, Stuart.
Thank you very much, Cheryl. It's great to have a chance to follow up on Yoshi's findings today. As Cheryl implies, good impact research should produce some impacts that help to improve the financial services that MFIs provide. But MFI people sometimes say to me, hey, Stuart, this diary research is fascinating, but so what? What practical guidance does it give? How can it really help us improve our work? So to begin to give an answer to this so what question, I'll use a couple of examples briefly from the current Bangladeshi diaries, where we have been working with 60 poor and very poor diaries for about 7 years. We've just done a thorough review of all of the 307 loans that our 60 Bangladesh diaries have taken over the last 7 years. Can you put up the next slide, please, Cheryl? Of all the loans that the diarists take, it turns out that only about 1 in 20 actually come from MFIs, but MFI loans represent about 44% of the value of all the loans they take, so they're very significant. And we used our detailed daily data to figure out what the MFI borrowers spent their loans on. Now, if you look at the slide that's on the screen at the moment, more than half of the loans were used either to repay other debt or were simply absorbed into the household spending stream, what the slide here calls liquidity management, in which case they were used mostly for day-to-day consumption. I think that this finding should be of interest to the MFIs concerned, but it's even more revealing if we try to look at what's behind it. For example, what's behind this headline number that almost a third of MFI loans were spent mainly to repay other debt? When they repaid debt, what had been the source of the debt that they repaid and how had it been used? We found that very often the original debt had been taken from friends and relatives and, or more rarely, from moneylenders, and used for a wide range of business and household spending. The MFI loan then acted as a refinancing loan rather in the way that Yoshi was talking about, allowing the diarist to repay the original private loan. Often, the knowledge that the diarist was likely to get an MFI loan helped persuade the private lender to give the loan in the first place. So there's a nice kind of a joint contribution from both the private and the MFI sector towards that client's borrowings. Now, this can happen usually because MFIs are not particularly well timed. The MFI loans tend to be issued as soon as the previous MFI loan is repaid, instead of at the time that the money is actually needed. Now, I don't think there's anything wrong in MFI loans acting as refinancing loans, but a better understanding of how MFI loans interact with other loans in the financial lives of their clients, I think would help MFIs improve their services. You know, after a loan is dispersed, MFI loan officers are often asked to do a utilization check to make sure that the loan was used productively. Now, when the background to the loan is in fact a complex interweaving of different parts of the client's financial life, such checks can be meaningless and can lead only to embarrassment and deception, unless the loan officer has been trained to understand these kinds of subtleties. Next slide, please, Shariel. My second example of how diary research can be directly useful to MFIs is a rather shocking thing that we learned soon after we started running the current diaries. We found that MFI loans often don't help small shopkeepers. Now that's a major impact-related finding, but a surprising one. How can it be? Lending to shopkeepers is one of the most often quoted examples when MFIs show off their successes, isn't it? Well, on this slide, you can see part of the daily cash flow of a small and successful shopkeeper who does not use MFI loans. The blue bars show his sales each day, and the orange ones shows what he spends on restocking his shop. The black line therefore shows the resulting income for that day. In such a business model as this, an annual loan from an MFI can't really help. And our shopkeeper knows this. He told us, if I were planning to expand my shop in some big way, an MFI loan might be useful. But for just running my shop on a day-to-day basis, MFI loans will be too big and might get me into trouble. Next slide, please, Cheryl. Evidence that he's right in that thought comes from several other small shopkeepers amongst our diarists. This slide, for example, shows what can happen and unfortunately often does happen. Within just a 9-month period, shown on this screen, this particular small shopkeeper took 4 MFI loans from 4 different MFIs. But those loans could not be absorbed into the very small scale daily operations of that shop. So they simply became a burden. They were taking MFI loans to repay other MFI loans at great cost and considerable stress. Now, from an MFI loan officer's point of view, shops are extremely attractive. Shops are permanent. They can't run away. They have regular cash flow, and they're accessibly sited right there on the roadside. So MFIs love to lend to shops, but the outcomes can be bad, as we see in this slide. So MFIs who use these kinds of insights to train their loan officers, I think, would benefit directly from diary research. And those are my 2 examples. I hope you enjoyed them. Thank you very much for listening to me.
Thank you, Stuart. Now we're going to move into the panel discussion. So I'm going to stop sharing. If you've been following the chat, there's kind of an interesting discussion developing around the timing of loans, and this idea that the utility of a loan is greatest when the loan is matched closely, the size and timing of the loan is matched closely with an expense, which is actually the exact idea that Yoshi and I were trying to put forward in the Fit Factor paper. I think when we looked at the Rishi-Para diary data, what we came to think is that the size and timing, matching the size and timing of loans is really important for maximizing the utility of the loan to somebody. So I'm wondering if in your shopkeeper example, for example, Stuart, would a sort of line of credit, a small, fast line of credit, be more useful to that shopkeeper than a loan? than a large loan? What do you think? Oh, sorry, Stuart, you're on mute.
Yeah, in that particular example that I showed, the missing factor really is savings. And interestingly enough, savings is a word we haven't yet used in our webinar this evening. And just as it is important for people's loans to match in some way their expenditures so that the loan doesn't have to be looked after, perhaps riskily in the household before it's used, or so that you don't have to go to the bother of borrowing from somebody else before you can get an MFI loan. So it is true of savings. So that is why I think that perhaps more useful than a line of credit in itself would be strong attempts by MFIs to offer both loans and savings in their offerings to their clients, because very often the savings can be more flexible in terms of time than the loans can. And that I think would benefit a lot of clients. On the question itself of the line of credit, this has been tried by quite a lot of MFIs over the years with some moderate success. And there are some studies that show that they do have advantages over the more standard MFI loan, which is given out and then is repaid usually in weekly or monthly installments over a period of anything from 3 months to a year or more.
Thank you. Yoshi, do you have anything you want to add to that?
About the credit line, right? I very much like it. I'm from how can I say, from practitioner point of view, yes. The getting, for example, providing savings to clients, it's tough because of a license issue. The savings from financial institution point of view, it's borrowing money from people, right? So it's a challenging, actually. We need to be big enough to not going to dive into crisis or something like that. But instead, credit line product, I think that the challenge is on our side. How we can manage, provide the credit line product to the client. That's the biggest, one of the biggest challenge for us, I think. And honestly speaking, I don't know the big success about these kind of a credit line type of product. Maybe because of I don't know, the loan assessment thing or cost of, I think, doing everything in timely manner. I think it's challenging, but I definitely like the idea of credit line type of product. And that's the reason why I picked up the COVID treatment example from Cambodia that is today.
Thank you. Now we've got some questions coming in and only 10 minutes left in the webinar. So I'd like to get around to these questions. Starting from the top, we've got one from Edward. I hope I'm saying that right. Did you get any specific indicators on the gender theme that you would recommend? Haruna, correct me if I'm wrong. I think that in the most recent Satya impact assessment, we had some questions around women's empowerment, for instance, about community how their participation in the community has changed, or how their involvement in managing household finances has changed. Is that right?
Yeah, that's right. So we asked the question about how much decision-making power do you have within the household around money management. And we did observe that quite a few number of the respondents have the power to do it. Now, we don't really know if it's because of the Satya loan, the additionality of the loans that the MFIs provide is still difficult to measure in the current impact survey framework. But yeah, that's one thing that we ask around gender theme.
I hope that answers your question. I think the short answer is that we still don't have very much data on it. We've tried out a couple of indicators, and we're still testing out various indicators to see what is most meaningful. That wasn't a short answer, but next question, also from Edward, is given what you saw in financial diaries, do you think that client perceptions are good enough to have an idea of the impact of a loan? I hope I'm understanding this right. I think what you're asking, please correct me in chat if I'm wrong, but I think it sounds to me like what you're asking is what's reported by clients on the inflows and outflows in their household accurate enough for us to get an idea of the impact of the loan. So on the accuracy of the reporting, I'd like to maybe hand over to Yoshi. What do you think?
Accuracy, yeah. Yeah, of course, the accuracy challenges is one aspect, right? But we have other challenges, of course. But accuracy, yeah. Okay, so let me share my experience last year, and one diarist answered like, okay, we took a loan. Actually, my brother took a loan, but I don't know what he spent the money for, and I don't know the name of the institution he borrowed from. Okay, so the diarist didn't know what exactly is happening inside the household. Okay, we are not able to know what the diarist or respondent didn't know. So accuracy, we need to give up to some extent. We have to admit. But is that kind of an issue of data collection or slightly other reason? I don't know. But anyway, the accuracy issue is there. And then another example maybe is like, yeah, we talked about income today. So for first for house improvement project household, do they really understand what exactly is happened or will happen in month? I don't think I don't know. So accuracy problem is definitely is there. That's my answer. Sherera, am I answering to you?
Thank you. Stuart, do you want to chime in on that?
On the accuracy thing, you know, the core data for a financial diary project are transactions, and it's pretty clear that the more frequently you ask the question, the better accuracy you're going to get about those transactions, which is why I've steadily moved over the years to a point where I'm doing daily financial diaries and probably wouldn't do any other kind. We have over the years also devised certain sort of simple tests with our diarists to look at accuracy. So for example, we regularly check on what their cash in hand balances are. And we can compare those cash in hand balances with the transactions that they have been telling us about since the last cash in hand balance. And if we find there's a big difference, then obviously our data enumerators go back to the diarists and ask them about it. But I would also like to comment on perhaps another interpretation of Edward's question, which is what do the diarists themselves think about the impact of loans? I think it's a very interesting question, and I think it's difficult to answer because generally speaking, I don't think that is a primary concern of the diarists or the borrowers. It's a primary concern of ours, not necessarily shared by them. What they want to do is to have their money management problems solved. And so they look at any sort of sequence of transactions in terms of, well, did I come out of that better off or worse off? Was that successful for me? I think if you were to ask them questions, most of our diarists, if you were to ask them questions about what they think the impact of loans is, we would get into a difficult conversation. It would be very difficult to get clear answers to that question.
Thank you. Yes, thank you for clarifying in the chat. I think Stuart answered the correct interpretation of your question in the second half of his answer. We are indeed considering doing qualitative interviews with diarists around questions like this. We've been thinking recently about, for example, using something like the most significant change methodology to understand what diarists feel has been the impact of loans and savings in their lives. So when we do that, if we have any, when we do that, and if we're able to share stories, we'll definitely publish them. I'm afraid that we are almost out of time, and it's a shame because there are so many interesting questions coming in. What do we think? Do we have time for one more question, or shall we wrap up?
Can we go for one more?
Okay. So in chronological order, has Gojo team observed the increase of customers experiencing unplanned expenses due to the pandemic and inflation this year? If yes, could you share some insights on the difficulties of considering those uncertainties in your impact measurement, if any? Haruna, I'd like to turn this one over to you because you've been in charge of the tracking survey in Sri Lanka, and I think the impact surveys we did with clients also touch on this a bit.
Sure. So, have we observed any unplanned expenses? Yes, probably more than what we used to see. So if we remember, there was a second COVID wave in India last year, April, May, and also most recently, Sri Lanka is experiencing a very big economic crisis. So basically, people are lacking the income or inflow of money to make their ends meet. So even, Sri Lanka people having difficulties to access food. At the time of COVID in India, people were having difficulties accessing medicines or going to doctors, etc. So yeah, we have observed this. What are the difficulties of considering those uncertainties in your impact measurement? So to be honest, in our output KPIs that we collect from our group companies, we don't really kind of go into that depth of understanding, how the loans are being used, for what purposes, and how it kind of has changed over time. So yeah, it's not too obvious in the output KPIs. However, as you saw in the financial diaries example that Yoshi shared earlier, we saw one example of Mbella case, which is basically, people took the loan and went to a hospital because of COVID. So that kind of interesting case studies come in from time to time. It didn't add like difficulties or complexity. It's just, understanding more about, oh, this is how the money is being used and this is where the demand is. So I don't know if I'm answering your question, but that's what we have observed, regarding the pandemic and inflation.
Thank you. I'm afraid that we are out of time, but what we'd like to do, if that's okay, is follow up. We'd like to maybe follow up over email on the remaining questions. So please allow us to do that. Thank you very much. Let me just quickly wrap up. Thank you so much for joining this webinar. If you have any further questions or comments about what we've shared, please email us at shriel.new@gojo.co and harunatanaka@gojo.co. Also, after you log off, there'll be a follow-up email with a survey. If you could take a moment to answer it so that we can improve on future webinars, that would be great. Thank you so much.
Thank you very much. Thank you very much.
See you. Bye bye.
Thank you very much.